Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Welcome to the IRS Solution Attorney Show. I am your host, the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Madewell. Welcome to the show today.
Good morning, Katrina. How you doing?
I'm doing great. How are you?
It's just another beautiful day in the neighborhood, isn't it?
I've heard that before somewhere.
Well, we have a pretty exciting show today, all lined up. It's all about how every tax problem has a solution.
I believe that would be indeed true. And I was looking at the opening statement here on our outline, and it's kind of interesting because I remember talking about this same thing to you, in fact, and how, the bar wants you to use the word may, but your perspective of it is all tax problems indeed do have a solution.
Exactly. It might not be the solution that you're hoping for, but there is, in fact, a solution to your tax problem. Now, Katrina, what you're referring to with the Florida Bar is years ago, I was doing a lot of direct mail advertising, and one of the headlines of the letters was that your IRS problems can be solved if you're willing to take the first step. And I still stand behind that statement. I believe it's true. But the Florida Bar has to pre-approve our direct mail solicitation letters, and you have to pay a fee, and it has to go to a committee of lawyers, for goodness sake. So what do you think is going to happen? I mean, they're going to pick it apart. And lawyers are all about language and parsing words and whatnot. And so they sent it back, and they said that, not all IRS problems can be solved. There's probably some unsolvable ones. And I really beg to differ. I think that all problems can be solved if you're willing to take this first step, which is obviously to, contact a professional, preferably me, and give us a call, and maybe we can get something worked out. But again, it might not be the solution that you're looking for, but when we dive into this later in the show, I think people who listen to the entirety are going to see that every solution does, in fact, have a solution.
Right. The unique thing, too, and we talk about this every single week when we do the train wreck of the week, is not every single customer that you have, not every single client in their case is the same. They're all going to be different.
No, I mean, it's almost a cliche that lawyers always say, it depends, right? But it really does depend, and that's why we say it so much, is it depends on the facts and circumstances of every unique case. Every case is different, and there's a lot of tax resolution companies that work in this area, and they're going to want to try and fit every single client into, an offer and compromise, which is where you make a deal to settle for less. And we're just really not like that at my law firm, because I get to make most of these strategic decisions, on behalf of my clients. And I'm what I like to call a holistic practitioner. No, I'm not one of those guys. It's like giving you acupuncture and all this other stuff.
Holistic attorney. I love it.
It's holistic because I don't care how we win. We just want to win. We just want the best result for the client. That's the bottom line. And if that means, filing an offer and compromise and making a deal, then we should do that. If that means trying to outlast the statute of limitations, and we'll get into all this stuff, and probably in this segment or the next. But if it doesn't really matter which solution we use. We're just going to try and find the best solution for the client.
Now, I think sometimes, and you and I have talked about this a lot before, and in fact, we actually did an entire show on the mental aspect of someone that has a tax problem, because sometimes that's almost where you have to start, isn't it?
I'm going to be really, really transparent, okay? I think the mental and emotional overhead that a lot of people have with tax problems is about half the battle. I mean, I think there's a significant percentage of people who have tax problems, maybe 30 to 40%. It's a big number. Where the problem really isn't so much the tax problem. Really, the problem is, again, the mental and emotional stress and anxiety that just dealing with these situations causes. And there are a lot of people out there in the world that just can't, or at this moment refuse to deal with it. And so, most of those people we can still help, because we can help them get over those hurdles. But there are some people where those hurdles or those barriers are so significant that we just can't help them. They're not helpable because again, this sounds bad, but they're not in enough pain to want to decide to make the decision to solve it, no matter what it takes.
Well, it's January, right? So the New Year's resolution for a lot of people might be, weight loss, to get in shape, to go to the gym. And there's that old saying, you can lead the horse to the water, but you can't make him drink. So you can't, the muscles aren't going to just jump on your body. It's going to take time, and it has to start up in your head before it actually comes out in your body.
Exactly. And that's why we don't do a lot of what I call chase marketing. We don't chase clients and prospects and, to try to get their business. My philosophy as far as marketing is concerned is we do a lot of what I call push marketing. So we're trying to attract people to us because we need them to be in the right mindset in order to resolve the problem. Because if they're not in the right mindset, if they've been sold, then they're probably not ready to do what it's going to take to solve the tax problem. Now that might even sound intimidating to some people, that you've got to get all ready. All I mean by that is you just have to have made, the mental commitment that you're going to do what it takes. I am not going to ask clients to do anything crazy. I've never asked a client to jump off a bridge. I've never asked them to do anything that I haven't done or I don't continue to do. So we're not going to ask.
It's a relief. If you have a tax problem, you do not have to jump off of a bridge.
Yeah, no, there will be no bridge jumping unless that's your thing. But, we're not going to ask you to do anything crazy. But, one of the things you're going to have to do, a prerequisite to solving just about every tax problem, is you're going to have to get your tax returns filed and up to date. So, again,
that's the most painful part, isn't it?
Yeah, for a lot of people, that is really a big deal.
But what are some of the excuses you've heard as to why people can't file their tax returns or prepare them, which is what got them in that hole to begin with?
Okay, so there's the fire, flood, hurricane, moved excuse. Okay, I just lumped that excuse into one box. And a lot of times those excuses are legit, okay? They really did have a fire, flood, hurricane, earthquake, moved, whatever the situation may be, but it's not relevant. It doesn't matter.
So let's say they can ballpark what their income was. I imagine a bigger hurdle for them would be, I don't have any of my expenses because I don't have any of the paperwork.
Well, yeah, that happens all the time. I hear it several times a week. And so what we're going to do is we're going to go ahead and get transcripts from the IRS that are going to tell us what 1099s and W-2s, for example, and 1098s and miscellaneous stuff that gets filed with the IRS. We're going to get all that from the IRS so that we know what they have. And one of the reasons that we do this is so that we can make sure that income that was reported through the IRS, for example, is going to be on the tax return. It's going to be reflected on the tax return. So if we have a 1099 for $45,000 and we prepare a tax return with $25,000 of gross income, it's an automatic audit. It's not even a what if. It's a for sure audit. So we're going to want to make sure that we report at least as much income as the IRS already knows about.
So you pull them from the tax transcripts, which makes sense because you're going to pull exactly what they have. It sounds like a great place to start. So I'm just using your example. Somebody had a house fire. There's literally nothing left. So what would you do if the income is similar as prior years? You would estimate what the expenses are from prior years?
Yeah, you're entitled to make a good faith estimate of your expenses, and you're supposed to put a declaration that goes along with that. And most of the time, if you do that, if you put that declaration, you're not going to be audited.
Does that get filed with the tax return?
Yeah, it can get filed with the tax return, and typically you would want to paper file that return. So
they would literally explain their circumstances and say, we literally don't have a paper trail, but to our best estimate, this is what the expenses were.
Exactly. But also remember, again, let me give you another hypothetical, okay? Person has $100,000 tax liability, and they're still missing the last 6 years worth of returns. They make $40,000 a year. They got a family of 3, okay? And they live in the Tampa Bay area, for example. Now, does it really matter what those last 6 years' tax returns even say? It doesn't make any difference. And here's why I'm saying that. That's probably going to blow some people away when they think about it, right? They've been stressing out and freaking out about, we got to get these these unfiled returns exactly perfect. I'm saying no. Who cares? Because you're not going to ever pay the bill anyway. So does it matter? Here's what I'm trying to say. You already owe $100,000, right?
Right.
And let's say, if you take no deductions for those missing years, you owe $200,000. Okay, are you going to ever stroke a check for $100,000, let alone $200,000? Answer: no, you're not, because you can't afford it. You're living on $40,000 a year, family of 3, you have no assets. We're going to do an offer and compromise. If the offer and compromise doesn't work, we're going to file bankruptcy and we're going to wipe them out. So the thing is we don't need to spend a whole bunch of time stressing and sharpening pencils and getting the numbers exactly right on the missing tax returns. one theory in philosophy, I've done this many times, is just take the income from the transcripts, put it on the tax return, take no business deductions, and just file the return like that.
See, somebody like me, I'm imagining if I haven't filed returns in 6 years, like your example, that would just give me anxiety. But I think it helps to have this conversation and talk about it on air, because if that is in fact the case for someone, they can go, oh, I don't have to worry about that anymore, because theoretically speaking, we're just going to fix this and hit the reset button.
Yeah, virtually every person that comes into my office, if they have large balances that they owe to the IRS, is really, toiling under a burden of anxiety. And I can see it. I can read body language. I can tell that they're anxious, they're stressing, and they're really worrying about this problem. And so I would say 9 times out of 10, when I make some statement like we just made, or I just made, about who cares about the tax returns? They just have to be filed. It doesn't really matter how perfect they are. You can see this visible change in the body language. One of the things that I really try to do.
Well, you're going to have to hold that thought, Darrin, and we'll talk about one of the things you do when someone comes in all anxious, as well as the 7 basic solutions when you have a tax problem. We'll be back in just a moment. Welcome back. You're listening to the IRS Solution Attorney Show.
With me, IRS Solution Attorney Darrin T. Mish.
And I'm your co-host, Katrina Madewell. Thank you for sticking with us through the break. And if you're just catching the show, today's show is all about tax problems have a solution.
And specifically, every tax problem has a solution, and that's what we were talking about before I was interrupted by the untimely break.
I know, right? That darn music. It wasn't just me.
I was talking about one of the things that I do when I have clients come into the office.
And what is that?
Well, one of the things that I try to do is, since I understand, after having done this work for, 16 or 18 years, I understand the mental strain and anxiety and the pressure that people are under. One of the things that I try to do is I try to leave them, I try to have them feeling better when they leave my office than when they came in. Now, it doesn't happen 100% of the time, but that's one of my personal values, is that I want people to feel better. And I think that everybody who comes into the office really should feel better, because they're going to have more information than when they left. And that's one of the things that causes us as humans the most stress, is not being able to make decisions largely because we don't have enough information.
I would agree with that.
And so
people are scared of the unknown.
Exactly. And so if you have a tax problem, you owe $100,000 to the IRS, and maybe you make $100,000 a year, and you haven't filed some tax returns.
One of the biggest, I'm gonna have to work the whole year for free.
Or a lot of people tell me that they think this is going to be a lifetime sentence. I'll never get out from under this. This is just going to go on forever. And I'm sure that I've never experienced this myself, but I'm sure that there are people who have killed themselves over, tax debt, because they just didn't know what their options were. And that's one of the reasons why we're doing the show today.
And that's exactly why you're here, and that's why you do what you do, which I love that you have this little niche of the market. So should we go ahead and jump into the 7 basic solutions that every person has if they have a tax problem?
Sure. One of the criticisms that I get of the show is that we don't get to the point often enough or quick enough. And so let's do this.
Yeah, snap.
So let's do this. Let's go over the 7 basic solutions all at once here, and then we'll circle back, and we'll go over them, in some detail. So the first solution is going to be an installment agreement. An installment agreement is a payment plan to the IRS. The second one is currently not collectible status, or sometimes known as hardship status. In this status, basically what that means is that the IRS agrees that you have no ability to pay either on a monthly basis or by liquidating assets, and they just basically put you on the back burner. And they'll just leave you alone, usually for a year or 2 at a time. The third option is an offer in compromise, and we talked an awful lot about that in the first segment. We talk an awful lot about this every week on the show.
And we actually have a show coming up on that, and it's what an offer in compromise is, in fact, and how it works, because we kind of glaze over it, but we're going to do a whole show on that.
Yeah, we'll do another whole show. I believe I don't know if it's going to air next week or within the next couple weeks, but you want to stay tuned for that and listen to that if you think that this might be a situation that might work for you. But an offer in compromise is essentially where the IRS will make a deal with a taxpayer and allow them to settle for less. And so I'll give you a couple examples here in a minute. The fourth option is potentially outlasting the collection statute of limitations. And this is really a big deal. The IRS actually has a time clock that's ticking on them. And this is beautiful. I'm so thankful that Congress passed this law way back when. Basically, the IRS has 10 years from the date you file a tax return with a balance due owing to collect the money. And I think that's really great because that means that this is not a life sentence, that it's a 10-year sentence. And I would submit that that's pretty long, pretty long, but at least it's not your entire life.
The next one's pretty shocking.
Yeah, the fifth option is potentially bankruptcy. You know, bankruptcy is something that a lot of people don't think can take care of tax debts and tax liabilities. And in fact, if you ask 9 out of 10 bankruptcy attorneys, they're going to say that bankruptcy cannot solve tax problems, and that's just not the case.
When we come back, we're going to tell you how you can. Like, not, back around to the 7 because we don't get this stuff fast enough. Break right now. Darren's looking at me like, ah!
I just raised my eyebrows like, wow, that segment went really fast.
10 minutes.
So, and then the sixth solution potentially is an innocent spouse claim. Now, we never talk about this on the show. We virtually never talk about an innocent spouse, but that's basically where you had a former spouse who actually racked up the tax obligation, and it's really not your fault. Therefore, you are innocent.
Does it always have to be a former spouse?
Yeah, pretty much. It has to be a former spouse. You cannot have the benefit of still being married.
To be late as well, right? Like a late spouse.
Potentially, maybe. I think it can be a deceased spouse. I did have a case like that one time. It didn't turn out too well. And then lastly, the seventh solution, which makes my comment that all tax problems have a solution correct, is that it might just be you need to full pay. It might just be you got to pay your tax bill.
Ouch.
And I know that that's not really a popular statement, but that is the case sometimes.
Right. So let's talk about all these in detail, which is why typically it takes us so long to get through some things because, we banter a little bit and I ask you questions about these things and I think, well, if I were this person, what questions would I ask? And of course, we're always open to your tax questions, or you can call Darrin directly because we love to read your questions and your comments on air.
That phone number is 888-438-6474. That's 888-GET-MISH, GETMISH.
Get Mish, like fish.
Exactly.
With an M. Exactly. All right, so let's loop it back around to number 1. So an installment agreement.
So did you want to ask me a question about it, or you just want me to go ahead and tell you what it is?
Explain it the way it is. It's pretty much exactly how it sounds, right? An installment agreement, a car payment, it's all sort of the same type of thing?
An installment agreement is basically a monthly payment plan to the IRS. Now, the amount that you owe is, in part, makes it depend on how much your payment's going to be. Now, of course, everybody, the joke is everybody who I talk to, no matter how much they owe, if they owe $3,000 or if they owe $3 million, when I ask them, well, how much would you feel comfortable paying on a monthly basis to the IRS to satisfy this tax debt? The answer is always ding, 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 $300. I don't know why. It just is.
That's your magic number.
That's what everybody always says, $300. When you say that and you owe $3 million, it kind of tells me where you are on the seriousness scale of things, especially if you're making, $270,000 a year and you're willing to devote $300 a month.
Maybe they just want to see what you'll say, Darrin.
Maybe, but it does happen quite a bit. But an installment agreement is basically predicated upon your ability to pay. So what the IRS is going to do is they're going to look at your gross income, and they're going to subtract your allowable expenses. Keyword there is allowable. So there's charts that tell us, how much you can spend on everything from your housing to your food, clothing, and miscellaneous items and so on. But essentially, whatever your monthly disposable income is going to be, that's what they're going to want for an installment agreement payment. Now, if you owe under $50,000, then the rules change, and it can be somewhat easier. If you owe under $50,000, then as long as the liability can full pay within 72 months, which is 6 years, then the IRS is going to let you make equal monthly, payments over those 72
So that's what I was going to ask on these installment agreements. Is it always the whole amount that you owe?
Not always. There's something called a partial pay installment agreement, which means by definition that the installment agreement will not full pay within the life of the statute of limitations. So let me give you an example.
Which is how long again?
It's 10 years. But I get clients all along that timeline continuum, right? So some people come in and they have unfiled returns, so we know their statute of limitations is 10 years. They have 10 years left because they haven't filed. As soon as they file, it'll be 10 years. But then I get people who come in and they want to ask me about, a 2003 tax return. They still have liabilities from 2003. And so one of the things that automatically, I don't even have to think about this anymore, but one of the things that goes automatically through my head is, well, if this is a 2003 liability, then we're probably getting short on the statute of limitations. So let's say, they owe $200,000 on the statute of limitations. They have 2 years left, or they owe $200,000. They have 2 years left on the statute of limitations, and they make, $80,000 a year. Okay. So what that means is they're going to have some ability to pay, probably some ability to pay on a monthly basis. So I'm going to make up the number. Let's say it's $100.
You don't want to say 300?
And listen, we can say 300. So let's say it's $300. So the $300 times the 24 months left on the statute of limitations is not going to come anywhere near paying off the $200,000 in liability, right? If they have no assets, okay, so they have no equity in their house, they have, no equity in their cars, they really have no assets other than their normal household furnishings, then they're going to be placed in what's called a partial pay installment agreement, and they're going to pay that $300 out over 24 months, and then the statute of limitations is going to expire, and they're going to win.
So it's interesting that you said the equity in the house. Of course, I have to chime in on this one because, Florida's an interesting state where, they can't make you sell your house if it's your homestead, but they can absolutely look at the equity in it for this installment agreement, right?
Well, I'm going to publicly disagree with you real quick, okay?
Okay, please do.
So the IRS can, this is a myth.
They can make you sell?
Yeah, this is a myth, and I'm glad that we're addressing it right now, is here in Florida, we're like indoctrinated into this state law that says that we have a unlimited protection in our homestead. And that is true as state law matters go. However, under the Supremacy Clause of the U.S. Constitution, federal law supersedes state law. Therefore, the IRS can, and very infrequently does, seize primary residence in the state of Florida. So they can actually seize the primary residence. I've seen it happen. It has never happened to one of my clients, but I've seen it happen. And they can seize that house and they can sell it at auction.
Oh,
so it can happen.
That was the ace of spades right there. It just totally got trumped. But that's all right. You're listening to the IRS Solution Attorney Show. We have to take a quick break. When we come back, I promise we're going to dive into the rest. We did quickly go through all 7, but we're going to continue to talk about all tax problems have a solution and the 7 basic solutions for them. Back in just a moment.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Welcome back. You're listening to the IRS Solution Attorney Show.
Hi, I'm your host, the IRS Solution Attorney, Darrin Mish.
And I'm your co-host, Katrina Madewell. And sorry I had to cut you off there with that whole ace of spades there. How you were talking about how federal rules basically can supersede state rules and force you to sell your primary residence.
Well, it is your job to actually interrupt me and make sure we make our breaks and whatnot.
That's
so that
right.
I don't get in too much trouble. But I was going to tell you a story at the break, and I decided to save it for the show, is that I did have a client one time who contacted me pretty late in the process. He lived in South Florida, and I think he owned 250 or 300 feet of waterfront on the intercoastal down in like Broward County, or it might have been Palm Beach County, I'm not sure, but it was very valuable real estate.
Yeah, they like that.
To say the least, it was very valuable real estate. He owed the IRS a couple $1,000,000, and he had been a tax protester and had been really, non-cooperative over the years, and he did contact us because he wanted to prevent seizure of the home, and we in fact did prevent the home from being seized. But that's an example of the type of person or the type of situation where there's going to potentially be a primary residence seizure. It's not,
So they were literally trying to seize it?
Yeah. I mean, they had the seizure order from a district court judge and everything. I mean, it was ready to rock and roll. But it's not, John and Mary Smith, who own a 3-bedroom house in Valrico, Florida, and live on $100,000 a year and just haven't filed for even 10 years. Making similar income. Those are not the folks who are going to, be under the gun for a primary residence seizure, in my opinion, in my experience. It's going to be the guy who owns the 250 feet of prime waterfront on the intercoastal, and that property's worth, $3 million and he owes $2 million. Does that
So
make
it's
sense?
really how valuable it is. Like
That's
they're
one of
looking at
the
that?
that's one of the factors for sure, is how valuable is it going to be, or how profitable is it going to be to the IRS. They're not allowed. This is interesting. After 1998, they're not allowed to make a punitive seizure, which means they're not allowed to seize any property if it's not going to be profitable. So before 1998, when there was a big overhaul of the laws, the Taxpayers' Bill of Rights, revenue officers would go out and seize cars, even though they would do it for fun. Now, there might be some revenue officers listening, and there might even be some who've done this in the past. I don't know. But they used to go out and seize cars and seize other taxpayer assets just to teach the taxpayer a lesson, to show them who's in charge, to show them who's boss. That's what they used to do.
And, moving past 07, there wasn't a whole lot of equity anywhere because everybody was down.
And that's what... that's one of the things that triggered that massive outcry in 1998 and caused the laws to be changed and offered so many appeal rights and whatnot that we have now, and then protections, because the IRS was just really running roughshod over taxpayers' rights.
Yeah, I mean, I imagine you probably got some that say or think they're going to play God in a sense, right? Like, anyway.
God bless revenue officers. There's a few different personality types, and one of the personality types is the type of person who pounds the table and says, "Pay me yesterday," and that's their potential solution to the problem is pay me yesterday. Well, that can happen. Yesterday's already gone. But anyway, moving along. I don't want to go too deep. We should probably do a whole show on revenue officers.
I know, right? But number 2 is currently not collectible hardship status. What does that mean?
So let me give you another example. Okay, so currently not collectible or hardship status is when the IRS looks at your gross income and your monthly allowable expenses, and it either comes down to you have so little money left over, $5 or $20 or something like that, or what I've seen a lot is the monthly disposable income is actually negative. Okay, so it's like negative $100 or negative $200 or something like that.
So what happens in that scenario? Do they actually get a break? Is that good for them?
If it comes out like that, what the IRS will do is they'll just place that account in currently not collectible status. They'll just call it hardship, and they'll leave that taxpayer alone, usually for a year or two at a time. Now, this can potentially be the end solution to a problem. So
because they're going to run out of time.
Yeah, going back to my example where there's 2 years left on the statute of limitations, if you can have your account placed into hardship status, then you can just run out the clock. Now, the problem that comes with unrepresented taxpayers is they don't know when the clock stops.
Right. Or when it starts.
Yeah, and I can tell them for sure with certainty when that's over, and we've won many, many cases over the years because we just outlasted the statute of limitations. One comes to mind real quickly, and I don't remember the exact dollar amount in controversy, but it was about $500,000. And I had represented this taxpayer off and on for over 10 years, and he called me a couple of years ago to get re-involved in the case, and there was some debate and some uncertainty as to when the statute of limitations would expire, and eventually we did determine when it would expire, and then we based our strategy going forward on how much we were going to pay and how we were going to react to the IRS and their moves, knowing that the statute of limitations was going to expire in December of 2016.
So can they, what happens if they end up making more money down the road, and, can they still, garnish wages?
If you're in hardship status or currently not collectible, same thing. If you're in that status, then the IRS is not going to levy. They might file a lien, just to, one lien to cover themselves. And you're supposed to remain current, right? So you're supposed to have your tax returns prepared and filed, and then you're supposed to not continue to owe going forward. So another thing that I do when a taxpayer comes in or prospect comes in is we have a discussion about, well, how did this problem occur, and what are we going to do to prevent it from occurring again?
Right.
Because if we can't stop it from continuing to happen, then we can't solve the problem.
Yeah, I was going to say, if you start to fix it, you can't fix it if it's one going after the next as far as years, right?
Yeah, the analogy is taxpayers dig in faster than I can fill the hole in, and if that's what's happening, then there's nothing I can do. I can't just go get a bulldozer. Well, maybe I might be able to. Bankruptcy might be the bulldozer. We're getting there. So that's currently not collectible status. It's kind of a tweener solution,
It's temporary, right?
Yeah, it's usually temporary. It's usually not the best solution, but sometimes it is.
So how long do they typically hold it in that status? How long have you seen, and do they kind of forget about it once it gets in that status?
There's basically 2 ways they can do it. They can do it for 2 years. I think they can do it for 1 year. So 1 or 2 years, time certain. or they can just basically put it in that status semi-permanently unless the taxpayer makes above a certain amount of money. And they don't tell you which one they're going to do. And they certainly don't tell you how much is the target, amount of too much money. So it's not great, but it's not terrible because they're not going to levy you or seize your assets or anything during that time frame.
All right, so number 3, offer and compromise.
Okay, it's kind of a chore to explain offer and compromise in like 2 or 3 minutes.
But we're going to do a show on this, so look for it coming up in the next week or 2 weeks.
Right. So an offer and compromise is where you make a deal to settle with the IRS, and it's based upon a relatively simple math equation that goes like this. Monthly disposable income times 12 plus your assets equals the amount of your offer. So let's go back to Mr. $300.
Yes, $300. Always $300.
Okay, so we're going back to Mr. $300. We're going to take $300 as his monthly disposable income. We're going to multiply that by 12. That's $3,600. And let's assume he has no assets, nothing. Okay?
No car, no house, no boat, nothing.
Yeah, he has no other assets. So we can settle that case for $3,600. Now, if he owes $100,000, then that is an amazing deal, right? And there's probably people listening going, I'm going to call, bull snot on that one. That doesn't happen. And I'm here to tell you it happens. It happens a lot. It happens a lot. A couple times a month in my firm, we settle a case with that kind of ratio. Just crazy. 6 figures, 4 figures. Happens a lot. But there's an exception, okay? And here's the exception. If that monthly disposable income is enough to full pay with the amount of time left that the IRS has, no deal. You don't get a deal. They want you to pay it out on a monthly basis. Am I making sense?
I think so.
Okay. So let's say you owed Mr. $300 is causing me problems now because it's so little. But let's say he owes $8,000.
That's his total tax debt?
His total tax debt is $8,000. He can pay $300 a month. And he has no assets. And there's 2 years left in the statute of limitations. When we initially plug it in to, the math, then let's say he has 3 years left on the statute of limitations because I just did the math in my head and it would still work. But if he had 3 years left on the statute of limitations, 300 times 36 is more than $8,000.
Right.
So he doesn't get a deal. He's not going to get to settle for $3,600. He's got to pay the $8,000. But if he owes $80,000, then obviously 300 times 36 is not even close to $80,000, and so he would get the deal. So here's what this means in very simple terms, and it's going to blow some people's minds. It's better to owe more tax money to the IRS than less. If you're going to file an offer and compromise, you want to owe more, not less. So remember,
which is what makes our train wreck so crazy, right?
Yeah. So remember when we talked in the first segment about people's anxiety or that's wrapped around with unfiled returns and all that stuff. I just said bigger cases are easier to settle than smaller cases.
Right.
So, all of that is, and this is what, kind of hurts my brain, is all of that anxiety, all of that stress, all of the marital conflict, all that stuff wrapped up in we haven't filed our tax returns for 6 years is often just useless because it might be to your benefit to file returns where you don't have any exemptions or deductions or whatever, because bigger cases are easier to settle for smaller cases.
And again, I use this analogy a lot in the real estate world because people think, a lot of times buyers think, oh, I don't need an agent. I can just go make an offer directly with the listing agent. I'm going to save that money. Well, it's not how it works. They already have a contract with the seller. And I tell people, when you do that and you walk into that situation unrepresented, it's kind of like playing a game. Maybe you've never played it before, if you played it a couple times, and you're playing that game against someone that does it every single day. In my case, for somebody like me for 24 years, you're not going to win because I know how to play the game. I do it all the time. And this is where somebody like you know the rules.
Yeah, I'm nodding my head because it's like somebody asked me the other day, well, can't I just do this myself? And the answer is yes. You can do this yourself. Just like when I have a clogged toilet at my house, I can fix it myself. And if everything goes right, I might actually get it to work, right? But if anything goes wrong, I'm going to end up really dirty and really mad. And
you could have a bigger problem. Like if you puncture a hole in your plumbing line or whatever.
Right. Or if you pour the wrong substance down the toilet and then it gets into your septic and it kills all the whatever. Then, they're just things that you don't know that you don't know.
Right.
And I can tell you with a high degree of certainty in my, let's call it 16 years of experience dealing with the IRS, I've already made every mistake. Not every mistake, but I've made lots of mistakes, and I've learned from those mistakes. And so you don't have to suffer from those mistakes. Now, virtually every single mistake I've ever made has been fixed. That's one of the great things about the IRS niche is that, even mistakes that are made, if you make those mistakes, you can usually fix them. But the point is, if anything unexpected happens, then you're going to be caught flat-footed, and you're not going to know what to do.
And how we're running out of time already to finish all these, I don't know. But when we come back, we're going to talk about number 4, which is outlasting the collection statute of limitations. We'll be back in just a minute.
Welcome back to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin Mish.
And I'm your co-host, Katrina Maple. Thank you for sticking with us through the break. And so now that we're back, we're totally running out of time. We're already in the 4th segment, Darrin, and you have to get through, a lot of these. So number 4.
Okay, so number 4 is outlasting the statute of limitations. We've talked about this in the prior segments. If you missed that, then visit the podcast at the IRS Solution Attorney on iTunes and the Android store. But basically, the IRS has 10 years from the date of the assessment of the tax to collect the money. If you're looking at a tax bill that has, for example, 2004 tax liabilities on it, then your statute of limitations may be growing short. It might be a good idea to meet with a tax professional and determine when that statute is, so that maybe you won't have to pay the liability. The 5th option is bankruptcy. A lot of people don't know this, but taxes can be discharged in bankruptcy. I'm going to try and boil this down for you real simple here. If your returns have been filed for at least 3 years, and I just way grossly oversimplified, if they've been filed for more than 3 years, you may qualify for a bankruptcy. You're going to want to talk to a tax professional, not a bankruptcy professional, first, so that we can determine if those taxes would be dischargeable or not.
So if you're filing, you may be able to include in bankruptcy?
Yeah, you may be able to include them in a bankruptcy, and you might even be able to put them into a Chapter 7 bankruptcy, which is a liquidation bankruptcy, which sounds scary, but you might be able to essentially, again, oversimplified, push a button and make your tax liability go away.
Hence, talking to somebody like you before you know because we're zipping through this and it's been an hour. But
yeah, exactly. So the next solution is potentially innocent spouse. Innocent spouse is super complicated. There's 3 different types of innocent spouse. So I'm going to just, again, simplify this. If your former spouse ran up some tax debt, then you're going to want to be thinking about talking to a tax professional about potentially filing for innocent spouse.
Okay, so I'm going to play devil's advocate because I was asking about late spouse, and you said no, not always. But why wouldn't somebody say, let's use your scenario, they owe $100,000. Why wouldn't they just say, all right, well, we're going to get divorced?
Well, that can happen, and if that happens, then it's potentially, an innocent spouse claim. But one of the claims that the IRS is going to make, the counterclaim, is going to be, okay, spouse, who's saying that you're completely, pure as a driven snow and totally innocent, but you also lived on that income that your former spouse generated, and you lived that extravagant lifestyle. And so the case that I was thinking about the late spouse, the deceased spouse, was actually a gentleman who survived his ex-wife. And they lived a pretty extravagant lifestyle. It wasn't like sort of your average lifestyle. It was above average, and we made an innocent spouse claim, and the IRS rejected it. And we filed a tax court petition to fight it, and we almost went to trial on that case, and I thought we were going to lose. So it didn't work out that well, and that was the argument that they were going to make. And there was extravagant expenses that she paid for that he was well aware that she was, not filing and or paying her taxes on time.
Maybe that's why we haven't chatted about it so much before, because it's very complex and it doesn't sound like it happens all that often.
It's very complicated, and I think it has really limited scope, so that's why I don't talk about it a whole lot.
All right, number 7, which is not very fun, but full pay.
Okay, so full pay is the last option, and I'll give you an example, okay? And I get these calls all the time. Guy makes $300,000 a year, and he owes $8,000 to the IRS. Hey, Darrin, what can you do for me? Answer: nothing. What am I supposed to do? You can clearly pay that back under those fact patterns, right? I mean, I might be able to get you an installment agreement if you don't want to write a check for $8,000. I can get you an installment agreement, and the payments will be super low, under $100, and we can move on from there. But I can't wait. I don't have a magic wand. Right. I don't have the magic go away wand or magic IRS go away wand. I wish it did. Yeah.
So what are the benefits in the installment agreement? Does it stop some of the penalties and interest?
Well, penalties reduce. They're not going to levy you. Sometimes they're not going to file a lien. So that would be one of the examples. The other thing could be, maybe it's a higher number. Maybe it's $25,000, and you technically have that money in the bank, but you just don't want to give up that liquidity, right? So it might make sense to go ahead and enter into an installment agreement with the IRS, so you can just make monthly payments at $300 or $400, and it takes some of that stress off of you, so that could make sense. But full pay is the solution in some cases. I hate to break it to you.
Well, it's about that time.
Well, what that sound means is it's about that time for the IRS train wreck of the week. And what that means is this is the segment of the show where I talk about somebody who came in and, frankly, they were a train wreck. I mean, they owed the IRS a whole bunch of money, and usually, almost without fail, they leave smelling like a rose. So in this particular case, it was actually an offer in compromise. My client came in and he owed $549,428.58. So we'll call it $550. Okay, we'll round it up to $550. And it came out, a lot of times I post these results on my Facebook page and people get upset. And
that's
like,
when we get the hate mail and we have fun with the shows like we did a couple weeks
we
back.
Get all the haters come out and they're like, he owed $500,000. He must be a crook. Okay, so in this case, what happened is this particular gentleman sold his business, okay? And like a lot of times, he had a contract to work within that business as a consultant or provide some services. I don't remember what. So he was still kind of involved in the business, but not really. And part of the terms of the sales contract were that there was a smaller outstanding payroll tax liability, and the new owners were supposed to assume that from the sale, and they were supposed to pay it. And then they were, obviously, everybody's supposed to pay their payroll taxes going forward. And that's not what happened in this case at all. What happened is the other partners, not only did they not pay the limited amount that was due already, but they went ahead and they racked up a whole bunch more tax debt. Okay, and so pretty soon it was almost $550,000. And so what we did is we filed an offer in compromise. And when we filed that offer, the offer amount was $66,831. Now, that was based upon a very limited amount of monthly disposable income and half of the equity in my client's house. And it was only half the equity because his spouse was not liable for this old payroll tax penalty because she wasn't involved in the business. So it was only his half of the equity in the house.
I may have missed this. Did he sell the business somewhere along the way?
Yeah, he sold the business, and he sold the business, and then they racked up the tax debt, a lot of it, after he had sold it. So he's just an employee at that point in time. Okay. But the IRS still made the determination that he was responsible and he should have done something. And he did try to do a lot, actually. While this was all going on, they're not paying the payroll taxes. He's pounding the table and screaming from the rooftops that they're doing this wrong, and they just ignored him. Anyway, they racked up about $550,000 worth of tax liability. So we filed this offer for $66,831, and the IRS accepted it as filed, no questions.
So how do we not counteroffer or try to?
That never.
Almost out of time or
that
something?
That never happens. No, the statute of limitations wasn't long. They had a lot of time left on it, like maybe 7 or 8 years, and it just worked out really great. And I
wonder if the ownership interest changing had anything to do with it.
It did, and the offer specialist realized that my guy wasn't really the bad guy in this equation, and she also realized he was getting a pretty good deal. It's a little bit more than 10 cents on the dollar, right? But this particular client, it just doesn't always happen. I kind of wish it did, but this particular client became a very good friend of mine, and it could not have happened for a nicer guy.
Wow, this was like a fun-filled show. Like, I had no idea we'd have so much stuff to talk about with these 7 things that are solutions to a potential tax problem. If someone wants to reach you, they can get you at 888-GET-MISH.
888-438-6474. GetIRSHelp.com. Podcast on Apple and Android. Also, our app is on Apple and Android, IRS Solution Attorney.
And we'll be back same time, same place next week.
For today, we're out.